have with us Dhruvesh Sanghvi, co-founder at Prespero Tree. He's a management graduate from NMIMS University, and he did his computer engineering from Mumbai University. Finishing Prespero, he had been associated with various roles in financial markets, with his last term being with Mr. Vallabh Bansaliji. He's very passionate about financial market, and he started his career very early. In fact, he developed pasha for the markets while studying, and he firmly believe in creating value by investing for the long run. And he has been very instrumental in his research backed investing at Prespero Tree, which we would be knowing more from him down the line. So Dhruvesh, a very warm welcome, and I would request you so as to start with an opening note in which would appreciate if you tell us about how your journey started and it has progressed over a period of time.
Sure, Prince. So first of all, good evening, everyone, and uh, thank you, Prince, for hosting me here. It is my pleasure speaking with you all, and I think Prince has hosted many uh, uh, analyst, research people, or the fund managers, or the investing community, and they have all shared, and I have participated in some of them, or I would have seen some of them on YouTube. So his work is phenomenal, and thank you. I feel privileged to be a part of your platform, Prince. Thanks a lot. So uh, I would just like to first put a disclaimer that uh, I will share my experiences and learnings about market in case if we happen to discuss about any specific stocks. The idea is just educational there because most of these stocks I would have owned at some point in time in the past or maybe holding. And my view can really change immediately, even though we may say it long term, but sometimes things can change. So these are not recommendations. We are not discussing individual stocks, but even if we use it as an example in the discussion, the idea is not about recommending it. So please be aware about it. My intent is not to recommend any stocks here. uh, yeah, so I think I will go ahead with the basic question that Prince has put in terms of my journey. And this he had indicated that he will start with my journey question, which he does with everyone else. And so I thought about it, and maybe for better articulation, I have just uh, thought about it about 10-15 minutes before this started. And so I started I mean, my start with stock market, I remember particularly where my mom was checking some stock prices in on CNBC somewhere around early 2000 or maybe slightly before that. I don't remember the time. And my father has a metal business forever. And like in many Gujarati families, there are always these sort of experimentation happening in stock markets, right? That we we invest, but actually we are trading, and sometimes we are not even trading; we are speculating. Sometimes outright speculation. So that was the journey. Some money was allocated towards the market, and my mom was looking at the ticker on CNBC, which no more is. I think nobody watches it anymore. Everything is changed, even from early 2000s till date. So at that period, I remember particularly one part where my mom was looking at the price of a company known as BHEL, BHEL. And I used to laugh. ऐसा कैसे हो सकता है कि कोई कंपनी का नाम भेल हो? And then I asked for the full form, and my mom did not know it. So this is what I was talking about. She felt that she was doing investing, and maybe she was trading or doing some outright speculation. But that is how small family uh, investing starts. They start with some sort of price action mixed with greed, where we start getting interested in making profits because we think we can. And once we start losing some money, we realize that there is something more to this. So that was the typical journey at my family. I got very interested. My engineering completed in 2006. And between 2000 to 2006, I had spent, I would say, more than 3, 4, 5 months in broker's office. I used to go during some of the vacations or some of the times. And I particularly remember buying one stock in 2002. I think it was 2002. It was on the death day of Dhirubhai Ambani, and the stock price went downhill substantially. And I just exclaimed uh, to the broker office that, I mean, while I was trying to buy it, just 100 shares, that time even 100 was, I mean, my family was helpful to allow me to experiment again. And the only thought was that company band thodi hone wali hai. And that really helped. I mean, that kind of basic thinking really worked out. And one thing led to another. Of course, there was a heightened interest in understanding what is going on around, asking the right questions, getting curious about processes, getting curious about understanding who are the players, watching television, over time getting exposed to basics of the Economic Times or the general business newspapers. And very soon, um, I, I I graduated to what I would say becoming slightly confident, because markets are generally kind and it can take anybody. Even a fool would feel that it is it is my own ability which is making the profit, but it is the market which is generally allowing everybody to come inside and take a dip, and we can all make some money inside and feel confident about it. So that was the first few years. And it was during my engineering. I also used to always watch markets in general. And I remember the 2004 period where NDA government changed to Congress, and there was a decent sized mayhem. I particularly remember HPCL and BPCL because in my family members there were futures and options position. Of course, why these kind of things happen is our own greed getting mixed with their incentives, and we get sucked into the ideas that we can really make it big without having a lot of money in the markets. And they lost a lot of money. uh, I was very closely watching. I used to keep uh, going in some of these brokers' offices who were closer to my place. And that is where I learned. They sometimes did not have dealers, so I used to sit on their dealing terminals just to take a feel of how to check the prices and all. So that was the ecosystem before my engineering. I always liked computer programming. I used to program simple coding on the stock market area. I created some softwares around the insurance area on how to predict, oh sorry, how to estimate what kind of outcomes can happen in an endowment policy or a ULIP policy, if these are the outcomes or that are the outcomes. That in those days, those softwares were not even available with most of the agents or the distribution people. So that will just give you a bent of the mind that I have come across in those period. um, uh, by the time of engineering getting completed, of course, it was not decided that I will pursue a career here, but it was always my interest. And over time, I got exposed to um, the writings of Buffett. And with that, I graduated, or sorry, I should not call graduated, but I also got exposed to Peter Lynch. It was the time when what you see and what you invest really worked very well. Valuations were benign. In the period of 2006, 7, 8, I also did a lot of arbitrage, either in the form of applying into IPOs and selling it on the first day, trying to estimate what kind of allotment ratios will be there. Even those things are happening now, and a lot of people are doing it even today. But those were the days when application sizes were 50,000, so you have to collect people's account and try to invest in them. So I remember collecting 30 or 25 of my family members' accounts and investing some amount for a period between 2006 to 8. And it really provided me some of my seed capital, I should say that. So that was there. And uh, I completed my MBA in 2010. Of course, the formal education was very important in channelizing the basic questions, because when we come from the engineering background, typically we do not have any understanding of accounts. Not that we don't understand the basics, but what happens is the formal training, it always helps you to quicken up your learning process. And that is what I would say MBA helped. MBA also helped me in networking with people who were interested in the markets. Around that time, there used to be those what do we say, online forums. And I think it was around this period of 2009 and 12 where there used to be a forum which was then known as the Equity Desk, run by Basant Maheshwari. Ideally it was a democratic forum, but over time some members were not happy on the forum and they moved and created Value Picker. So this is where Donald and Ayush and all of other people met. I participated in it. I used to work at that time, so couldn't post under my name. But I used to read and interact with people on the equity desk. I met Basant. I met a lot of investors during that time. Some of them I'm in touch even then, even today. And automatically after that, AGMs, analyst meet, conference calls, and a lot of other things were attended. And when you are starting the career, you want to meet anybody and everybody and try to learn. And that is what I did, I think, in those period. And the formal education, being in Mumbai, definitely helps, because a lot of activity happens in Mumbai, or used to happen. Now it is happening across India, and due to internet and multiple platforms available, it is far easy to get connected. Pardon me. So yeah, this was the time. I should also highlight the importance of all my friends, uh, who even during school we had a gang. Almost everybody is in some form of association in stock market. In my college we had a class of 30, out of which more than 20-25 people are actively in some sort of association by investments of their own, or they are looking to I mean, they're working with some of the companies. So all of this helped in various forms. I would say reading, learning by your own self, our own curiosity, and naturally there is always that greed that I also wanted to make money. Greed not in that essential sense of a very bad way, but there is obviously that element that I want to make money, and that is why we are here. So apart from that, uh, the people whom I don't know, but I used to, I mean, I particularly remember not missing a single interview of Rakesh Jhunjhunwala starting from 2001. I think I would have seen almost all his interviews 2 or 3 times. I found him to be very helpful in shaping some of my thoughts, because he was the guy who used to openly talk about his mindset without worrying. And we didn't find, I mean, I've worked with Inam Group. There are stalwarts here, but nobody comes out and speaks. So even without knowing the group, you could actually understand what is going on in their mind. And last but not the least, there used to be Ramesh Damani ji's talk, a money control messenger board, where I was religiously participating all the time and learning. We used to get stock ideas, the ideas um, about how to invest, how to save, etc. So these are certain parameters by which it starts for everybody, and then it is the interest which takes us everywhere. Of course, there are a lot of distractions on the way. That, do I do only self investing, or I also do business? Because in investing there are drawdowns which are very big, and it becomes very challenging uh, to deal with those drawdowns, because if you are not having an income stream, and if you have to deal with these drawdowns, how will our own mind or your own mind react? It is very difficult to even imagine, especially when I was in 2008, 9, 10, 11. And the scars of 2008 and 9, I want to also touch base upon that a little bit, because though my invested money at that time was not much, but even that fell by 50-60%. However, I very, very closely, because as I said that I used to go to brokers' offices, and uh, I remember the day when I was there in on the 21st of January 2008, when there was a lower circuit of, I think, 15-20% or something of that kind in the market. Like, I could see, I metaphor that I use for this is, I could see suicidal thoughts in the broker's mind, kind of a situation where he was almost bankrupt. He had over traded. He had allowed over trading by his clients on very high leverage. Those were the times when leverage was also very high. Like, almost people with 5 rupees could trade 100 rupees worth. The SEBI and its regulations were not as tight as they are today. So these were certain of my experiences and things that helped me actually to completely avoid futures and options trading. Even I have done it in very, very small pieces, but I did not have to go through it by myself, because I saw it very closely somewhere. And of course, association of reading of good people, starting with Buffett, Munger, and I mean, we have now host of books and everybody keeps sharing, so it's the same list everywhere, and we can keep reading about philosophy, and one life will be less typically. But the idea that everybody preaches is that we have to buy value, we cannot overpay, we have to sensibly invest, and investing is not complete speculation. You have to make calculated guesswork, so there is a bit of speculation there, but it is not about prices, it is about understanding businesses. So these are my foundation part of my journey, I think. um, Prince, is this okay? How should we proceed? Please take it a little bit ahead.
Great, Dhruvesh. I must say, like serendipity clubbed with at the right place at the right time. So you began your career at right point in time. So obviously there are up and down, but again, perseverance is one place, one thing which can keep you going. So Dhruvesh, like would appreciate if you tell us about the investment philosophy at, for your individual investing, and obviously you'll be doing it same at Prospero and for your own. So would appreciate if you tell us about the framework you use for investing.
Right. So on the, you know, first let me just make, because this question is such an open-ended one, and what Prince means, and this is for the benefit of overall viewers in general, that what Prince means is what people call what is your investment philosophy or what is your investing process. um, I would say that it has always been very difficult for me to define my process the way many people easily do. The main reason I feel is that there are just so many ways to make money in the markets. And over and above this, it is extremely difficult to determine the role of luck and role of skill in the kind of markets that we are, which is the stock market. So more often than not, where I feel I don't myself realize if it is my skill or is it my luck of being in India at the right place at the right time, understanding the basic structures correct. And however, with time, I would say I do realize the importance of having an investing process. So for me, this is a journey, and the journey of investing process is where I would take you a little bit. So I started doing like anything in a haphazard way, because when we don't have capital, we have to build capital either by earning from other means, businesses, taking money and help from family, and at the same time creating the fastest possible outcome. Because our money is small, we can be reckless with it, because even if I fall, maybe another 6 months of salary income or the business income will suffice for it. So we will take a set of risks at those type of time, which we may not be able to take now as we evolve as investors. So that is level 1. So apart from doing this speculation come trade come momentum kind of investing for a few days to few months to few weeks, Um, the next step naturally for me was looking at arbitrages, because there are many and ample arbitrages used to be available, at least I should say. I remember me doing commodity arbitrage where, due to help of my partner today, he used to be my broker at that time, and also a cousin. So what happened there is, he was able to derive nearly 30% on a commodity arbitrage, agricultural commodity arbitrage. So that is what I have done as well. Then there was a time when I have done trading, when especially when I was in college or post college period, where almost all my friends from the market, from the education side, they all started to do something, and everybody was into that seed capital mode. And those were the time when we were in the 2008, post 2008 fall. The markets were also very conducive. Of course, we were not aware about the kind of investing opportunities that that market is having. At the same time, because my investing portfolio had also fallen substantially due to the 2008 and 9 period, somehow, due to my reading on the web and association with fellow members on the forum, and reading Peter Lynch approximately around that time, I decided that, yeah, I will only do investing which is, what you see is what you get kind of an investing. What Peter Lynch says that जो products और services आप समझते हैं आप उनका ही काम करिए, that is very easy. And it really appealed very well. And I do remember having a two stock portfolio at that time, having almost 50-60% in Page Industries and around 40% in Hawkins. So, and it just turned out to be a phenomenal ride after that. I made 20 times in, or 16 times in Page Industries, and I bought Hawkins at a dividend yield of 5% or 6%, where the dividend was around 40. And today, the dividend of Hawkins itself is above 100, I would say, and price probably is 7-8 times. And in fact, the first leg of upswing in both these companies came in 1 to 2 years. So, here, what was the role of luck versus skill? It's this is what I was talking about. The second aspect is, to move from this two stock mindset to start understanding more and more companies, more and more sectors. And that is what kept happening all the time. And as one of my friend keeps saying, that we were in the Sonia Gandhi era, where India never moved up very fast and it never fell very fast. So the consumption led themes were the natural go to, where we can hide ourselves, and that is where we started our career. So we were very happy and we really outperformed those periods. So that is where we started. But over time we realized that in investing there is just too many things. It is just not about identifying what you get, as what you see and what you get. Sometimes what you see and what you get is so prized and is known by everybody that it doesn't make sense to buy. Sometimes we have to go and do cyclical. Sometimes it is maybe sensible to go and do B2B businesses, which have some decent sense of moat, or we may have to move into a cigar butt investing. And to me, it is still not very clear that what I exactly want to do, particularly with respect to my personal investing. However, there is a clear cut understanding and a deep appreciation of the investing process, and it is getting shaped up. So, in my current stance, where I have been in the last 4 or 5 years, where my 60, 50, 60, 70% of the portfolio is almost same for the last 4 or 5 years. And uh, the typical things that I have observed that I like is the recurring nature of revenues, the longevity, the kind of growth that it provides, and it should, and if it is possible, possibly in the mid and small cap space rather than very large companies, because that is where we can imagine it better, we can learn better than our competition. And I now have a portfolio of more than 25 stocks. And sometimes I have some experimental positions which actually go until 30, 35, or 40 companies, but predominantly 25 stocks. And in this, there will be multiple sectors having multiple sensitivity. And I have really started enjoying the diversification side. And and at the same time, I do also understand that there are just so many ways to make money in the market, that it is never only a game about, or only a question about concentration versus diversification, or should I only be investing into consumption companies, or only MNC companies, or only this type of companies. There is no silo of that kind. On a broad level, I'm trying to train myself, learn about sectors, learn about the asymmetric nature. We need to be in the market to aim for a much larger outcome, and not be satisfied with the 12 and the 15% outcome. Because if 12 and 15 is what I'm aiming for, I better put my money in indexing, and really try to do something else, because India provides so many other opportunities for all people like us. So why waste time at earning 12%? I mean, I do at the same time understand that just because I imagine that I want to make 20, 25, and 30, maybe it is my inability, or maybe it is that the market is so richly valued that it may not allow me that outcomes. So I don't know if I've answered the question about process. Yeah, one more part about process which is very clear to my mind is, uh, I deeply appreciate asset allocation. I deeply appreciate, and I deeply try to follow. And what do I mean by asset allocation is a very simple definition, that I cannot put 100% of my money, and I cannot uh, I cannot rely on my routine life out of my stock market incomes. This is what I mean by asset allocation. And that is why it is very important for me to also create passive income, so that I create a holding power, especially during stress times. Otherwise, it is precisely during those stress times we may end up selling, or our mind will give us some jerk, and our emotions will go out of hand. So I do believe from day one, nobody can do asset allocation, because if we don't have money, how will we do asset allocation? So somehow you have to figure out your own way to reach to a certain stage. But after reaching a certain stage, it is important that you provide for the base for the family. Otherwise, the family compulsion will ask you to liquidate things at a wrong time. And this is what I realize, that asset allocation is extremely important, and it is, though it is known to everybody, but it is mostly underappreciated by all. So that is one part. Another very important part of the process, investing process, is to first know our own self. And we are also, our emotions and our thoughts and our intellect, or whatever we may say, our abilities are also evolving. So it is very important to keep a check on our own emotions, our own mindset, our own abilities. What are our energies? When I was 25, how I can work, and when I am 38 today, how I can work. And at 38, I'm thinking, uh, can I continue to work the way I work today at 58 or 60? And if the answer is no, do I want to change a certain things in my ecosystem, or the way I want to do things? Are some of the very important considerations that I have in my overall investing process. Initially, I used to be in front of screen, but what I realized over time, that I don't like to be in front of screen. I just do not enjoy sitting and watching stock prices. So if my process is such that I have to see the results fastest, and I have to make the decision fastest, it will not work for me. It will just not work for me. So this is one of the inputs that I take as a part of my process, that I do not want all the information fastest, and I do not want to comprehend all the information at the immediate moment possible. And therefore, it is it dawned upon me that it is therefore more important for me to focus on the businesses, and business ownership versus stock ownership. I do differentiate in my mind very highly. And these are some of the pointers which I have on a particular portfolio strategy. Is, as I said, 20 stock 25 stock portfolio as of now. It can vary, it can go to 35, it can go to 20. I'm open. um, I'm trying to do as less trading, try to understand, try to think from a strategic angle, long term angle, continuity angle, and over time try and find a value which suits me. At the same time, I am also now very cognizant of the fact that competition in investing world has dramatically increased. Even when in 2009 to 14, I think it was much easier for me. Maybe it was my recklessness, and or it could be that the market were in terms of participation were less. But right now, I think there are great number of people who have entered the market, and everybody wants to be here. And this is one of the sector where there is just no entry barrier. Everybody, just you, what we need is just one laptop or just one computer uh, and internet, and we are all competing with each other. So I am cognizant about the operating environment where I am in and trying to make calls and try to find ideas. I obviously want to further improve my investing process, understand companies much better, much deeper. However, these are ambitions. Some of it are not fulfilled, and I am on the path, I would say, to achieve some of it. So yeah, this is the broader part of the investing process or the investing philosophy. It is a evolving process. It's not a static thing.
Right, Dhruvesh. So, Dhruvesh, we all know, in today's time, there is information overload. So, is it right to assume that the market inefficiencies are getting more discovered in comparison to the times which you were talking previously?
Absolutely. Uh, Previously, I mean, let me give you a journey here also. And correct, you can now stop me, because if it looks like a big large monologue kind of a thing, you can cut me down. It's absolutely okay. But I will try to answer this. Just imagine in early 2000 there used to be large desks which used to sit, where they used to call pair arbitrages. One person sitting on a computer will buy in Bombay Stock Exchange, and the other person will sell in National Stock Exchange, and people will make anywhere between 12 to 24% a year. And this is completely risk free. This is complete arbitrage. It is like buying some vegetables in Dadar market and selling it in Borivali market. I mean, these are locations, right? So it is a similar kind of a thing. With time, everybody discovered this kind of thing, and that therefore it is very natural that this arbitrage opportunities will come down. Then people found, for example, IPOs. You apply, they are not strictly arbitrage opportunities, but everybody knows you apply on day one, whatever allotment you get, you sell on day two, and it's almost over. It is just a function of how fast you can rotate money and how well you can raise money. There are a lot of learnings there as well. But the predominant concept here is again simple arbitrage, and because it is so simple, it attracts a lot of people, and because it attracts a lot of people, we see this kind of anomalies just almost going away now. We don't find big opportunities, because if you now do the same thing, what are the chances of allotment in any of the IPOs that a small investor has? Almost nil. 1 out of 10 or 1 out of 50 people get some small allotment, even though there is excitement that the stock went up 50% or 100% on day one, but it has no meaning. You cannot get anything out of it. The third form is this commodity arbitrage that opened. This is what I clearly remember. But it started with 30 and 40%, and over time it really went down to 12 and 15%. So it's almost gone now. Then there are these arbitrages in the form of buybacks, open offers, and many other such corporate actions. They still do exist sometimes, but the large part of that ecosystem has also gone away. So you are very right that when information is so abundantly, easily, with high speed available, these arbitrages will go down. However, the good part about being in market and having had these experiences is that once in a while some of these things really come, and it is either unnoticed, or either market is in a fatigue, or number of participants are not looking there, and there still exist. But you cannot solely rely on this and make a career. This is just a small part of your overall large ecosystem that you are managing.
Right. So, Dhruvesh, like Black-Swan events are different all the time. If we talk about 2008 and period, and maybe if we compare it with the Corona times, both were different in their own terms. But how did you position yourself in those tough times when there was no sort of certainty and everybody was clueless? How had been your experience of 2020 and 2000? Yeah.
2020, somehow, I don't know, because somehow it will look like a boasting exercise, and but somehow I was not as affected as I should be. And even today, I am questioning my own self, that is it just my own stupidity that I was not affected, or in my mind, or is it my genuine understanding and confidence about the stock market and the Indian markets in general? Again, so I don't know if it is my skill or my luck, whatever happened. However, one very cognitive bias which I have added from the start, out of the reading of these uh, great investors and following some great people, is that even if I don't know, subconsciously I am very confident about India. I am sure that in India things will keep working out very well if I have the horizons. So I did one exercise based on certain of these discussions, that what are the worst possible outcomes in any world markets across the globe at any point in time. Now, what happens is, what are these worst possible outcomes? The worst I could find is something like a Japan in 1992, and even today, or I mean, when I checked last time, the index of that country had not even crossed the 1991 or 1992 peak. So when somebody says that I am okay with investing in long term, sometimes we don't realize that in Japan that long term really turned out to be almost 30 years, and still people have not even recouped their index levels. So, uh, okay, forget about Japan. Japan has a problem of demography. It's a relatively small size in terms of number of people and multiple other problems that it may have. And so, the closest that we get is some parts of Europe where that kind of stock market history is available, and the other is the US where those kind of history is available. So, automatically, when we see those things, we see this 1929 to 1945 period where there were like real pains in those markets. Things fell, things went up, things fell again. For 15, 20 years, returns were not made by people. If on an index level, I'm saying you can always pick up a stock and it can really work out very well. So sometimes when I keep looking at these ads by the mutual funds or my own industry, and sometimes even my own self, because how do I explain 20-year as a long term horizon? Nobody will invest. So but the truth is that we have to look at it from a very long term perspective. But if you have that longevity available, then you are very safe, because even if you make mistakes, as I said, market will take care of us automatically, because market is growing, country is growing, demographic is favorable, all the things that we are all aware. If we are watching, I mean, just to pick up any Modi speech, and most of these things are available, and it is genuine. I'm not even being sarcastic on him. It is just genuine, but just that it is very repetitive, but it only works from a very long term perspective. So in my mind, I am very comfortable, and I always keep telling my family that we should always count the portfolio to be 30-35% lower than current prices. And when we start living and thinking like that, it is very easy for us to think longer period. We don't want to touch the portfolio. Our life is not dependent on portfolio. We are not increasing our spends or the income stage, sorry, spending stage, to such a level where we have to too much rely on big external incomes, and all these being grounded kind of attitude which almost all middle class families would teach their children, is the same. We just have to live by it correctly and have the correct structure about why are we investing in the country, what are the benefits of investing in a democratic a country having such a large population, having less than 2000 or around $2000 per capita, and the kind of entrepreneurship that the country has. Eventually we will grow very well. We have grown even without great political leaders. with sometimes good political leaders, we can actually gear up to a much bigger level. So, with this broader structure in mind, it becomes only an opportunity for you to buy. Of course, there are those times where we will feel anxious, but if we are not leveraging, and if we have, the basic expense profile sorted, then and we have the longevity that I said a lot of times, then we are sorted. We can try and clearly think. Of course, we will have to shift the portfolio. Some of the stocks which we felt are not doing well, we have to get out at those periods. If better stocks are available, we have to book loss in one and move to another. All that things, almost all decent investors or having some experience will do. So, asset allocation philosophy, portfolio philosophy, and having a broader mindset about how the country functions, how the market functions are important. And we have to obviously understand that howsoever great our outlook is about the country, there are always risks. Something in the form of COVID has come, so we are saying it was COVID. But in 2008, nobody knew what kind of crisis will happen, and then it happened. We don't know what kind of things will happen again, and some or the other things will keep happening. Whether market falls by 20% or 50%, we don't know, but it is going to happen for sure, and we will have to bear the brunt. I'm not into timing the market that I will get out just before those periods and get in just after the fall. Somehow I don't, it doesn't sound appealing to me. And more so, even if there are people who can do it, I cannot.
Right. So, Dhruvesh, like filtering out stocks in itself is a very tedious task, because as you were emphasizing on the importance of networking, right? We get so many ideas at any point in time, and if we are keeping on social media, then again we are bombarded with a number of ideas. So, how to like constrain or like form a sphere of investing which has to be looked into seriously before selecting any investment? And after that, I would request you to tell more about like position sizing, like how you go about. You like do one lump sum investment, or you gradually build your position as the business performs.
The first part that you mentioned is how to select ideas. I mean, I'm just distilling the question for me. So, or which ideas should you allow to work upon, kind of a question is, uh, in a bull market, it is always going to be a problem of plenty, because very recently I tweeted from this context that, in bull market, everybody wants to explain the company in 5 minutes, and even I will understand everything about the company in 5 minutes. It's surprising, but it happens with almost everybody. So what happens here is that सब इतना तेजी में होते हैं, सब इतना जल्दी में होते हैं to make money, that they just want a reason that it should appeal to our mind, because mind is already fixed that we want to buy. Even if we sell something, we want to buy something else. So the decisions are really, really made very fast by almost all people at their own context. So we really need to understand the behavioral biases that we have, and we will not be able to understand all. But I remember, I think it was this Charlie Munger who has written some behavioral biases related paper, which had some 30 or 40 behavioral biases, and there it's a very difficult to read, 10 pager or something like that. But even if you pick some of them and try to understand and live by it, you will realize that, there are certain things within you, I mean within me for myself, and you for yourself, that we need to understand. And this is where I will just link it to the process part, which I said, which will help you. Where is process helping us? Process or investing philosophy is helping us precisely to answer this question, that what will I allow and what will I not allow. Sometimes, I mean, I remember my father sending me messages just recently in the last 2 months, or 3 months. At least 20 times he has messaged me about a Suzlon, because one of his friend has purchased Suzlon, and he was very aggressively telling to all his friends. And of course, it has worked. He bought it around 8 or 10 rupees, and it is now 20. And there is very strong reason about everything that is happening around it, maybe. However, I have to understand what I want to allow and what I don't want to allow. Once I understand that, filtration becomes slightly easy. So I am trying to have companies that have business architectures, that have some longevity. There is a decent sense of growth around them. At the same time, my old nature is to buy very low or get sucked with sometimes a high value buying or the cigar butt kind of investing. So if I force myself too much that I don't want to do that, that is also not right, because then my mind will, some kind of misery will enter inside mind. So I do allow myself some space, but I am aware that I am biased for cheaper prices, right? So I need to be aware about it. Sometimes just being aware about it itself can make you question your own thesis, or why are we allowing something like this? And mistakes will still continue to happen. Second is, if somebody has a very concentrated portfolio, let's say a 5 stock portfolio, the person will have to be far more selective in terms of what he chooses and what he allows even to study. Forget about what he allows in the portfolio. But for a person with a 25-30 stock portfolio, the guardrails will need not be so high. So again, it all depends upon where we are, who we are, what are our thought processes around how we want to deal with it. And that is where this investing process helps. It helps tremendously. Otherwise, it is very easy to get bombarded by so much noise around. I remember in one of my friend's wedding, I had a privilege to meet Nemish Bhai, Nemish Shah, and we were a couple of friends who just tried to interact with him, and we just got 5 minutes or something like that. It was a busy wedding kind of a situation, and we asked that, what is your suggestion to us, or to young people like us, etc. And he just mentioned one line, that you need to control the ability to understand noise versus good things. I mean, basically, how to cancel noise. That is what you need to learn in this information age. So I think I'll sum it up with that quote kind of a situation.
Right. So coming to position, how you build your position in any company, and is there any upper or lower cap on like how much percentage of the portfolio that you allocate to one single company?
So previously, I used to not debate, discuss and try and understand, and I had these questions a lot uh, in my process. However, I think I found one very good explanation by a friend known as Vivek, uh, where and his logic really appeals to me, the best I would say till so far, that the size of the position is an outcome of the company and not my choice. So in my mind, any which ways, I was never a person that I would say I cannot do only 5 stocks. I can do if it suits me at that time. At the same time, I am not the person who will say that I cannot do 45 stocks. If it suits me, I will do 45 also. However, I found this thing to be the most uh, rational solution to the question that you are asking on position sizing, is that as we study companies, a company will tell us what should the position size be. And I'm not diluting the name or giving a bad outcome, and I'm giving you some examples. Let me think. It will be easy. So let's say if somebody found a consumer centric company, let's say for example, Asian Paints. Why I'm saying it's consumer centric, because ultimately it's a brand chosen by people who are buying the home decor, or uh, you know if I'm doing my home design kind of a thing, the interior will ask me which paint do we want to use. I like this color or that color, and most likely we will either choose with Asian Paint or one of the top two brands, mostly Asian Paints, let's say. Now, if that is the kind of a brand, or a Nestle, for example, even better, if such kind of brands are available, such kind of longevity, such kind of recurring nature of their revenues, such kind of long, I mean, we can easily say that another 50 years later also these companies will be there. At least today's evaluation will tell us. Of course, things can go bad, etc. But or for that matter, Google or Amazon, let's say some of these type of companies, then naturally our allocation and if the price at which we have evaluated provides for decent margin of safety, decent amount of returns, etc., we would love to have a higher allocation to that. Now it comes to, let's say there is a company which is having big orders from railways today, and another 5 years there will be a large number of orders, but we don't know what will happen after 5 years, or we don't know what happens when government dispensation changes. The recurring part is not sure. How large can they scale, can they survive, etc., is not there. But today it is cheap, and we know, and we have the visibility for another 3 years. In such a case, should I be investing just because it is good and my process is for 5 stock portfolio and I like this? Should I make it a 20% allocation? No, I think this is the answer. The company should tell us what the allocation is, rather than me telling that I want this allocation and only I will allow such a company. So, uh, for me, this is the most valid explanation that I have reached to. I have heard many people coming, and all people have some sort of um, investing thought processes and how they size up and build up their positions. But I think this is the most rational thing that I have understood about position sizing. Whether I am doing it the way I have understood it, no, I think this is my recent discovery of last 12-15 months. It becomes very difficult to change the portfolio the moment I have understood something. It takes years to live the things that we understand today. So if I am modifying my process, it will take me a couple of years before I reach that outcome.
So, Dhruvesh, if you hear some disconfirming, maybe you are investing in some company and someone from your network has a disconfirming view about that company. So, how you take that and how you go about it?
Here I have one good mental model which I realized. I don't remember where I read it or where I heard it, but it is the word constructive criticism. Somebody does not like, and if he is constructively criticizing or has a, I mean, if he or she has understood the company and suggesting something, I'm more than happy to learn. But more often than not, 90% of the crowd is just blabbering without any work. And sometimes even I am a part of that crowd. So uh, if I have understood the company, I have valid points, and if I criticize, most of my peers are very welcoming to all those kind of criticism, is what I have realized. And the same acts for me. If Why should I be worried? In fact, I would be more welcoming to all those people who help me understand and open my eyes to my biases, that this is wrong. But more often than not, people don't realize the investing process, investing methods, and they have not even studied the company, and they will have some notion out of some very little information that they would have collected, and many times they may end up going right, and they will feel that it was their opinion which went right. But as I said, how much is luck and how much is skill, very difficult to assess. So we need to be very humble and always ask our own self that how much of this is my own skill and how much of this is my own luck. And believe me, there are great people who are doing great work on improving their skill set.
So, Dhruvesh, valuation is like, and it is very difficult to explain in little time, but some sense on your valuation framework in your investing.
This is the most difficult part for me. Everything else, I think I've learned much better. Um, the idea of framework is very simple. It is ultimately, if I can predict what the company's cash flows will be in the future, the valuation of the company is typically the discounted cash flow of its future earnings, or basically we need to discount the future of the company and derive a value around it. However, to have a very singular point on value, because market always does not work like that, and not always, nahi, almost always people cannot predict the future of the company correctly. So This is where I think the topic that we have chosen really appeals, that it is as much as art as much as science in investing, because the art here is to understand the management, the understand the assumptions of the management while they are taking certain decisions. What are the strategies that management are doing? Are we understanding those strategies, and are we in conformity with that? How well do we understand the sector before we make a call about what the company is going to do? How well we understand the economy before we understand the sector? So many things are there. So from a pure valuation perspective, all the text is out there, but the inputs to those valuations are where the trick is. And we need to really get better in terms of inputs, because otherwise the valuation tools are available. So I find a lot of these interns who sometimes comes for 2 or 3 months training with us, and they have a very wrong notion about investing, and they feel that it is all about excel sheet and financial numbers and valuation. But that is not how people start, or in fact that is not. You can almost survive without it by doing basic back of the envelope calculations and be a fairly good investor if you are solving all the other pieces correctly. As investing becomes more and more competitive, the person or the players who understand valuation far better have a definite edge. I think that time has now come that people will have to be far better in their valuation, because, as I said, that competition is huge. Or the other way to play around is this, that when we buy stocks with very high margin of safety, the problem of valuation is solved, because when we have cost prices where even if I go wrong in my assumptions, I will still make some money. If that is the kind of attitude and we can find those kind of companies, that is a very easy way to deal with the valuation aspect. One more point I would like to add here is, suppose, even though I want to have companies at very low prices, or good companies at great prices, but that is not easy, and that is where the behavioral side or emotional handling side comes through. Most of us are trained not to keep any cash, because that is how we have started, that is how we have got trained, that is how we have got fed in terms of system. And all the players also keep talking the same thing, that I don't keep cash, I don't keep cash, I feel restless if I keep cash. These are the kind of statements that you will find often within a lot of great investors. However, when we see uh, old investors, who have done really well, even without sometimes having the great ability of valuing the company correctly, is because they bought it cheap. I often tell internally here that how often have we found a Rakesh Jhunjhunwala paying up too much? Like, he has bought great of the great companies and he has done mistakes also, but all those things are not burdening him down because he has not paid up. And it is very difficult to not pay up when we have determined that we will always be invested, especially when we don't have the abilities of that great man. So, yeah, that is all about valuation.
So Dhruvesh, at times we are too early to the party when you're saying keeping too much of margin of safety or maybe buying companies very cheap, and obviously there is an opportunity cost to that. So how you see that?
One short answer to that is, we need to learn to increase our ability to take pain. And I will narrate this answer with examples. I have many, too many. So uh, most of the investing text, or the kind of exams that we take in investing and courses on risk, it all talks about um, the variability in stock prices, that higher the variation in stock price, higher is the risk. But if you think about it, who cares about the variation in the stock prices when it goes up? The question for an investor is only when it comes down, right? And is there a way to deal with it? Yes, the one way is that buy so ridiculously cheap that you don't have to worry about it. But do you have enough patience to sit on cash for substantial long period of time? And then the quote of Charlie Munger will really work out, that he acts very seldom, but whenever he acts very fast and very big. Extreme patience and extreme action. That is what he calls. Now, that is a fantastic way to do it, but do we have the emotional bandwidth to really achieve it? If we do have, that is the best way to deal with it. Number one. Number two, if we don't have, we need to create the ability to absorb pain. And how will the ability to absorb pain come? By having a good asset allocation. That you should not be relying on your daily happiness out of stock market incomes. The moment that is there, automatically we have an outcome that even if I have identified a stock which has not moved up and has in fact contrary to that moved down, what happens there? We naturally like it more if our thesis is correct, and we like it more sometimes if we have money we can add a little bit. Otherwise we have to shut up and just wait and absorb the pain and wait for a better time in terms of stock price. Our focus should be on the earnings capability. Has the earnings capability of the company for the long term got hampered or not? So let me give you some examples of recent times, right? um, I think somewhere around in 2020, I was discussing with my wife that, what is your view on theme parks? And at those times, all amusement parks in India were closed. So I gave her an example of Wonderla. That what is your opinion on Wonderla? I'm thinking to buy the shares of this company. And she said, "Arey, who will buy? And nobody's going. Why do you want to think about buying them?" Let's say the stock price around that period was around 160, 170, and the stock did not move anywhere for 1.5 years. And the moment the normalization of cycle happened for them, their 1 quarter profit was equal to last 2.5 year losses, or much more than that, in fact. And stock went 3x from there. So, in fact, let me correct. I had actually purchased Wonderla even before 2020, saw a 50% drawdown, and it did not move up for a longer period of time when everything else moved up. But the thesis was not broken. In fact, I had more confidence about it for certain reasons. And just because price had not worked out in my favor for 3 months, 6 months, 12 months, or 18 months, it does not mean that I am wrong. Let me give you a slightly older example. Um, I have, I mean, I know in passing reference one guy who owns the shares of Cipla from 1970s, somewhere around 1970s. And he doesn't know anything about investing as such, but he is one of the largest individual shareholders of Cipla. And once somebody told me that he had put some 10,000 rupees in 1970s, and somewhere around this period what it must be. So I just, as an academic exercise, did that work, and it so turned out that it was a 33% CAGR, and it translated to some very big number, 40, 50, 60 crores, whatever that number is. I remember 33% CAGR. Now, what I saw, that everybody will feel wow that his 10,000 became, let's say, 50 crores, whatever it is. Everybody feels wow, but people don't understand that what kind of pain that guy has taken. In the journey of 50 years, Cipla has had more than 12 to 15 falls of about 30%. जस्ट इमेजिन, आपका 10,000 रुपया 30% नीचे जाता है ना, तो खाली 3,000 का लॉस होता है. आपका 1 करोड़ अगर 30% नीचे जाता है ना, तो 30 लाख का लॉस होता है. अगर आपका 100 करोड़ 30% नीचे जाता है, तो 30 करोड़ का लॉस होता है. So though it is 30%, but when you start feeling about it, it is big for everybody. Because दूसरा कुछ किया नहीं था उन्होंने वो पैसे कमाने के लिए. So for him, even 1 crore was very valuable, but he still stayed. I would give a very small example that I had. As I said, in Page Industries, I made, let's say, a 12 to 15 times. Now, in that journey between 2009 to 14, even Page, jaisa acha company, had corrected about 20% or about 30% for 4-5 times. So, the answer to how to handle the being early or a stock price fall or being late and all that is very simply, we need to create the capacity to absorb pain. That's the simplest answer, because in stock market risk hai, we cannot avoid risk. Most people try to avoid risk nahi ho sakta hai.
So, Dhruvesh, like sell most of the time comes with regret, and it's very difficult to condition one strategy about it. So, how you do when it comes to selling a position? And on the top of that, as we were saying, like you invest for a long horizon, right? But at times the things go wrong. So, what is the time you allow any investment so as to gauge whether the thing you had in mind with that investment are playing as planned, or you need to cut it short?
So I have one very good example, which is what I am, uh, debilitating today also. Some of my friends on the uh, on the Twitter space right now who are there would identify. I will not name the stock. It's a capital market NBFC which I own. It is almost 5 years. I have not made money. It is 0 or 5% or less than 5% CAGR. In the time when index would have probably doubled, having a decent 3 4 5% bet, or maybe slightly more, dependent upon what was the price and when I entered extra, etc. So एट द सेम टाइम वो कंपनी ने इतना खराब नहीं किया है, लेकिन आज भी मेरे को लगता है कि they are good people, decent set of management executing it well. There is a chance that they can grow from here to probably a doubler of their current levels of profitability. It's fairly to low valued company, etc. Multiple things jo, which properly identifies with your question. Now how do I deal with it? This is where I love my diversified portfolio strategy. If I were a concentrated portfolio person, I cannot allow such large underperformance with a 10% or 15% bet. And because I have deliberately chosen a strategy where I have 20, 25, or 30 stocks, this allows me to experiment, because who knew that Wonderla in my portfolio would go 3x? But similarly, who knew that this NBFC and the capital market entity that I'm talking will not work at all? So uh, there is no clear cut answer. Sometimes I have, you know, I remember in Sasken, fantastic company, great people, couldn't execute so far. It's still not game over for them, but it turned out to be a game over for me. I went out, I said, yeah, enough. I want to move somewhere else. So far in this company, somehow I'm not tired. Maybe it is my commitment that I have worked more about it. Maybe I am right, and maybe over time it will make money. Or maybe I'm wrong and I should actually sell it yesterday or day before yesterday, or today or tomorrow. I don't know. So there is no clear cut answer, but the idea is to keep observing, keep introspecting, and sometimes even after I sell, it will become a 10 times and I will end up regretting. So we need to distill, but the selling aspect is extremely difficult. The best way to think about it now here is, who is the best guy to invest into stock market? It is not the stock market participants who are full time here. The best people to invest into stock market are the people who have earnings outside stock market. Because even if I make a 5% mistake right now, if I have earnings outside, that's the best thing. I can keep and make one more 5% bet. Who cares about only this bet not going right? I can have really long term portfolios. I can really keep building positions. And even on a fall, I will have some income coming from elsewhere, because my business is not this, or my income is salaried. These are the best people. But what they lack is the emotional mindset to have that patience create sorry the term that I used in terms of that, we need to learn to adapt to agony. We need to create the capacity of suffering. That is what most people have a problem with, that they cannot suffer. They want to see every time stocks should go up, and every time stock should uh, uh, give them a positive outcome, and in the time that they think. और दूसरा प्रॉब्लम क्या होता है, they will all people will say कि हाँ मैं long term हूँ, लेकिन most of the people are talking long term from an angle of income tax returns. ये भी एक मजेदार बात है. So when we say long term, हाँ सर long term ही है हम लोग, but long term क्या? तो long term 1 year क्यों? क्योंकि income tax बोलता है long term is 1 year. But they are not thinking so much about what has gone wrong in other markets or in other countries for years like 5 years and 6 years. And that can happen to us without we realizing. वो हो सकता है. If somebody had invested in any period between June 2017 to June 2018, for 2.5 years, if he is a mid cap and small cap investor, ask him what kind of tragedy was there. Index was up and most people were not up or not even equal to index in those periods. So this is where it is. It ultimately boils down to some of these mental models that we need to create and understand. We cannot change the rules just because we are coming in the market. We need to understand the broader rules and the framework of market and adapt to it.
Right. So, Dhruvesh, current market outlook, any are looking at seriously? I mean, obviously, names not required, but sectors or maybe any subsectors which are looking promising at this point in time?
Uh, it is one of the hardest markets because we as investors who are doing some sort of fundamental investing or are doing some sort of fundamental investing always had a period where mostly price and falls, lower price were very normal. Every once in almost every year or every 6 months we have seen falls. So just imagine a mindset of a person like me who started after 2007, not lost a lot of money in 2008-9 because the size was small, and had made a significant uh, inroads in terms of basic wealth generation for our own self. Each time we have got opportunities, even when we were stupid, and because we were just ignorantly bullish about the country, because we were just at the right place at the right time, we have always got opportunities and we have grabbed those opportunities. This is the first time where I think market as a whole collectively is moving up for right reasons, and this is the first time where we really have to make those uh, uh, I mean, it will really test our own understanding of markets, that what we select. One way that most of the people in in the in my peer set or community that they are participating is that they are chasing the momentum of earnings, and I don't think it is necessarily a bad thing. It is one of the way to do it, that you keep following the results, and till the time results are good, keep buying them or keep holding them. uh, but for me, it is a little difficult to do this kind of investing, because it requires extreme close understanding and not understanding, I would say extreme close observation of day to day things of what the company is doing, which is not what I wish to do in general. And this is where it is getting a little tricky now, that if I am not chasing momentum, I really need to make some calls, correct, on what kind of investing I wish to do, etc. So currently, I find market a little, because the space where I am in is more mid and small companies rather than large, and I find the valuations not to be very easy and attractive, where I can just say ki ha, broadly we will do very well. I can say we can do well, but suppose if I get new 100 rupees today of my own, I don't think I can really deploy more than 40, 50, 60 rupees today. It's very difficult above that. So I think that will give you a sense of but I am not necessarily saying that market is going to fall or anything of that kind. I don't even have that kind of mental framework where I really predict what is going to happen in 3, 6, 12 months. There are some people who understand all of this because they maybe are tracking the Nifty EPS and have some sort of valuation bands in their mind based on the forward earnings, etc. And we keep hearing about them on a lot of public media interviews. some big investors, etc. But somehow it doesn't appeal, uh, or the reasoning doesn't appeal to my mind, that how can I think like this? Either I follow somebody on this, or I can say that it is as of now not appealing to me in terms of answering this question. It is not easy for me to answer a question on how is market looking over next 3 and 6 and 12 months.
Fair enough. Yeah. So, Dhruvesh, like as we progress in our experiences, so normally the error of commission is more of like taken care of, but there are often error of omission. So, any instances to your mind which you studied well and had conviction, but you didn't invest?
There are so many like that. Uh, but I think recently this error of omission and error of commission has come so much in limelight that it is there in a lot of Twitter, a lot of WhatsApp groups, a lot of peers are also talking. I don't know where has this got triggered from. Uh, I mean, on a side note, where is this coming from so much, so often these days? However, a lot of text has been written. I am not the thinker of that kind. I am more of a follower of the greats, and a lot of great people have been saying that error of कमीशन से ज्यादा ओमिशंस आर मोर हार्मफुल, कि हमने जो देखा नहीं वो ज्यादा बढ़ गया. सिंपल करते हैं इसे तो, जो हमने देखा नहीं और जो हमने देख के छोड़ दिया उसमें हमें ज्यादा नुकसान हुआ क्योंकि वो बहुत ज्यादा बढ़ गया. और जो हमने लिया और उसमें गलती करी उसमें हमको नुकसान हुआ, तो किसका नुकसान ज्यादा? This is more complicated, but if you, I mean, if some people rewind and hear this a little bit better, तो शायद समझेगा. But naturally, most people will focus a lot more on I do not want to do this mistake kind of a thing. कि ये स्टॉक मुझे मैंने लिया था और ये मैंने गलती कर दी. These are the typical things which people will evaluate more. Very few people evaluate कि यार ये मैंने देखा था, ये मैंने नहीं देखा लेकिन मुझे देखना चाहिए था, और ये मैंने देखा और मैंने नहीं लिया. I definitely think that there are so many of those kind of stocks which have become, I mean, in last 10 years there must be so many 20, 30, 40 baggers that has come. Why have we not got 2, 3 or 4? Is what each of us have to ask. If somebody has got it, great. But if we have not got it, we should ask. And we should learn from them and adapt, probably.
Right, understandable. So recently, like the book from Pulak Prasad also has mention of this type 1 and type 2 error, which we say commission and omission. Again, well explained, Dhruvesh. So Dhruvesh, will like if you want to talk about more about Prospero tree, so would appreciate that.
Uh, I basically, in the company, we started basics of our family money management, and our very few set of clients who were originally broking clients to my partner, over time they moved in more kind of distribution services. We are not very large or any of that kind. We are trying to get more organized, more visible over time, and at the right time and at the right platform I will speak more about it. But on a broad level, the investing philosophy and the mindset is what I broadly tell you about.
Right. Although, like in our journeys, we meet many people, but again, there are few people who have great impact on our style. So, any names to your mind?
um, okay, so I will bifurcate them in two parts. There are people whom I have never met and they are legends, and I have learned tremendously from them, either from the books or from their interviews, or um, from hearing about them, kind of a situation. That is one. And that are all common for almost all investors who are doing some sort of value investing in India and outside. So that is one. Some of the other friends whom I have been like, I would not say that only one person has contributed to everything, but I have learned tremendously from my peers. And to call names, um, I am just wondering. I mean, if I forget one versus other, and should I be naming them? How comfortable they will be? But all people in the investing universe, some of them you have interviewed, some of them um, uh, who are not so available to talk in this manner. While I was working with Vallabhbhai, I was very lucky to be physically in the same space where he operates from. So sometimes you also see and learn from other people how they conduct themselves, uh, how they manage their ecosystem in the times when things are good, in the times when things are bad, how are they maintaining their composure, etc. My partner has helped me in a lot of learnings because he's elder to me by 14-15 years, and he has one extra uh, decade of experience than that I have. A lot of promoters I have met, a lot of companies have had very positive impact. Particularly, I wish to speak about Hawkins, not just about me making money from it, but that was one company where I have attended 12, 13 of or 10, 11 of their AGMs. One of the companies where I have done it consistently. And Chairman Brahma Vasudev, who has passed away a couple of years back, but out of his speeches, out of the way he conducts and the way he speaks about integrity and what he means, and the transparency that they maintain. So these are some of the attributes that you keep learning from people. Um, Particularly, I wish to talk about some of my school friends. I have had a fantastic friend circle, which somewhere I call, seamless web of trust. We can trust them. We can call them at any point in time. They have been very helpful. There are people in my college during MBA where I really created bonded, strong relationships, and we really have great fun together. Some of them are great traders, some of them are good investors, and they share, we learn with each other. The last is due to the overall ecosystem of AGMs and analyst meets and investor community being so receptive to each other that anybody can call anybody and people will respect and talk and share. The way, I mean, I don't know you personally and we are speaking here, so this is the power of today's network that is available to everybody to harness. And I've made tremendous friends in Hyderabad, in Delhi, in Kolkata, in Bangalore, and in my current scheme of things, I now am not increasing my network more, rather than I think it is now becoming deeper in terms of relationship, because at a point in time, any which ways, you cannot manage more than a couple of relationships correctly. You don't have enough time. You cannot any which ways be everywhere and try to be omnipresent. It doesn't work like that. And these friends have been very, very helpful, very kind, and they have been immense source of inspiration for me, I should say.
Great, Dhruvesh. So, Dhruvesh, any recommendation on any books or any good content which our attendees can which can help them with their investing, and maybe which has helped you personally?
Um, I mean, I'm thinking if there is any unique book that I can talk about, but I think to the true sense, I really doubt if people read as much as they share names of the books. Number one. But I would twist the message a little bit differently. One is anybody can find, top 10, 20, 30, 50 investing books and figure it out. There are a couple of them mentioned on our website also. So I'm not trying to market, but yes, there is a list of books which are there mentioned on the website. Please go through them. So that is one. Um, there is no favorite kind of a thing because this is not story, right? It is an evolution. We like five things from one person and 10 things from another person. So that is how we have to evolve. But a lot of people do not have the capacity to read, uh, sit and read and spend that time. The beauty now is the podcast medium and the YouTube medium is available to all. And a lot of these things are now available there. the same people are giving their ideology on a 2 hour dialogue. uh, Most people don't have that attention span, and I would really encourage, choose your people whom you like. Try and have diverse set of great people and listen to them. They are all available for free to us. And having said that, any value investing book, any Buffett book, any Munger book, any Peter Lynch type of things, these are the starting points for people if they want to go ahead. If you want to really delve deeper into psychology, there is something known as Tell Me, I don't remember the exact, Tell Me Where I'm Going to Die and I Will Never Go There kind of a title is there. That is one of the fantastic books on behavioral areas of investing and other aspects. There are many books actually. So I mean, I won't say it is one. A little book that beats the market, or there are that wizards of there are this 3 volume book of multiple traders and multiple types of investors who have made money in different types of investing. There is one book which I now suddenly remember is Factfulness. I think most people uh, fail to even understand the basic facts of how the economy functions, how our worldview is skewed based upon where we are coming from, and Factfulness really improves our worldview better. So I would encourage that book as one of the very good books which I have recently read. I'm not a very avid reader, but I do try and learn bits and pieces. More so these days, I have moved more towards podcast due to the paucity of time. Right now, I'm spending a lot more time in understanding companies, new sectors, and how to expand my breadth of investing universe. The book that I talked about was Market Wizards.
Right, great. So, Dhruvesh, we are like more or less covered all the questions which I had in mind, and I don't know, like I had few requests from speakers, but again there was some glitch, and when I approved, they were getting dropped. But
Sorry,
anyways, like
Prince, your
something,
voice is
okay, is it
Prince. Your
better now?
voice. Can you repeat, Prince, what you said for the last 10 seconds?
Okay, is it better now?
Yeah.
So, Dhruvesh, like I was asking, I had asked the questions which I had in mind. So, just in case anything which I missed asking or you had in your mind to discuss or to say any concluding remarks for the day.
No, nothing. In case if there are any questions anybody would have, we can expand it for another 10-15 minutes if you wish, if you have time. I mean, I have some time. But in case if we want to conclude, from my side, I think more or less I've said it enough. Uh,
So, we got one request. Let me see if we are able to approve or not. Okay, A and K. Yeah, Anki, you can unmute and ask your question, please.
Hello, Dhruvesh.
Hello, hi.
Hi, my name is Ankit. I want to know about the solar industry. How much you are confident on the solar, going forward, considering
Fair
the
enough.
offices are moving on the solar. They are using, minimizing the power. So, can you give some highlights on that?
Sure,
And
Ankit, thank
Dhruvesh,
you.
on the top of that, energy transition is one space which is the top of the town. So, would appreciate to add to that Ankit's question also.
Right. So, energy transition is a much bigger topic. I don't know if I'm the right guy, but I've worked a little bit on solar. So, I think I can talk a bit on that. One thing is there that if you understand the entire value chain of the solar theme, uh, we start with polysilica, which is some sort of a mining earth material, which gets converted into a kind of a wafer, which gets eventually converted into a solar cell, which gets converted into a solar panel, and that solar panel are 80-90% supplied to the world by China. And these solar panels will ultimately become a part of the rooftop solar or the solar farms or solar plant. In the solar ecosystem, if 100 rupees is the cost of the entire solar plant, maybe 90 or 95% will be the solar panel related areas, and another 5 or 10% will be the balance of supply to the plant, or balance of plants. That is what they call. So basically, all these things, if I am a solar player in India, we are mostly surviving on some size, some type of subsidization programs, and some types of incentivization programs. What are those two things? One is, okay, there is a import duty if you get something from outside India versus what you manufacture and assemble. It is you are beneficial being an Indian manufacturer. But in India, nobody does a polysilica kind of a work to wafer and then to sell. Most of the Indian units are also importing everything from China, but assembling it to make it a solar panel in India. So this is level one. The second piece is incentivization, because today, after the COVID and the the kind of a trade war between US and China and multiple parts of the world, and the way this energy transition is moving, people do not want to have a single source of supply of energy, because if something like uh, if something what Russia did to the Europe on cutting down gas supplies and arm twisting, if suddenly something in a similar way, if what happens if China does something to the world in the same way. So this is just one of the ideas that political leaders want to de-risk their supply chains, and that is where India is trying to position itself. In India, there are few players who are already there, who are doing some sort of manufacturing slash assembling work of these solar panels and exporting it outside India and selling it in India. One of the big names which has now come up is Vari, which was always there, which was there much earlier in 2007-8. Slowly they expanded. They are based in Mumbai. Um, and Ankit, if you are in Mumbai, they are based in Borivali, so very unknown part of Mumbai, and they begin their journey from there. And I think they are talking of achieving a revenue of 30, 40, and 50,000 crores. So that is the size that they are targeting right now. And I think there will be an IPO very soon. I am one of the investors now. Very recently, I have taken a very small position there. It is not a recommendation, it's a private market company. So I'm just giving you the disclaimer there. The second piece here is there are small players which are there in the ecosystem. If you search by the name solar, you will get a lot of companies. I'm not naming individual. There is one more. There are two big houses who are targeting the solar play. One is Reliance and the other is Adani. After the Adani episode that happened in stock market, I don't know where their plan is right now. However, the plan of Reliance is to try and do the backward integration and backward manufacturing as much as they can. And Reliance being Reliance, and they always think big, attacking situations from a very top down approach. Eventually, I think they should uh, uh, become a significant part of the overall solar ecosystem. However, today, to call what part of economics will really work, what are the margins, it's very difficult. The only thing which is there is the demand is skyrocketing, and all countries are going to move a large part of their ecosystem towards renewable, and solar being the largest. So all people are looking at investing in some of these companies. Some names have really gone up by 2 or 3x in the recent times, but it is very difficult to say today that they will really succeed. What is their terminal value? How much is the longevity? What will be their margin? Is there any moat, or they are just another commoditized players? Will we be able to compete against China? even after the subsidization or incentivization reduces? All these are questions to understand, and these are not very easy answers. I don't know if I've answered it correctly, but this will give you some mental models around it.
Right, Dhruvesh. So, any other attendees want to ask any question can send in a request. We'll take that question to Dhruvesh. Okay, Ankit is sending the speaker request again. Let me see. Yeah, Ankit.
Dhruvesh,
Yes.
Thank you, Ankit. So, Dhruvesh, I guess no more requests
Yeah.
for the day.
So we can end it.
Concluding remarks you already told. It was great having you today, and so much of clarity of thoughts, and surely a great value addition to everyone around. And thank you for our attendees who kept with us for so long. And thanks again.
Thank you. Thank you.
Good night, guys. And guys, the session is recorded. I'll be uploading it over YouTube down the line. So if you are yet to subscribe to my YouTube channel, please do that, because these insightful sessions are uploaded over it, and you surely get a great mix of different experts, and you will surely learn a lot from their experiences. So thank you once again, Dhruvesh. Good night. Take care.